Good morning, traders. It's 8 a.m. Chicago time on the 8th of October 2015. It's a Thursday. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at what we've got today, Japan's August machine orders saw its third straight decline, came in at negative 5.7% versus plus 2.3% expected. It's a pretty hefty swing there, about 8 points. And then in other news, let's see, the BOE, the Bank of England, reported that it's leaving interest rates unchanged as expected. U.S. initial claims came in at 263,000 versus 274,000. So slightly better. Continuing claims, 2.2 million in line. Deutsche Bank guided Q3 loss at 6 billion euro, may eliminate dividend. Expected a drop on that, especially in the DAX, as it's a big component of the DAX. But the DAX is actually up 36 basis points from yesterday's close. It's very interesting. And then, of course, we kick off earnings season once again with AA reporting after the close today. Looking at today's calendar, not much on deck. We have natural gas at 9:30 Central, and then we have Fed Speaker Bullard at 8:30, right at the cash open. Fed Speaker Bullard to give welcome remarks at the symposium on savings. He's a leaning hawk, non-voter. Fed Speaker Juncker at 11 o'clock Central participates in a debate in Germany. At noon, we have Fed Speaker Kosher Lakota, non-voting Dove, gives welcoming remarks in Minnesota. And at 1 o'clock, we have the Fed releasing the FOMC minutes from September 16th and 17th meeting. Need to pay attention to that. And then at 1 o'clock, we have UK BOE Speaker Mark Carney. And then at 2:30 Central, 3:30 Eastern, Fed Speaker Williams, non-voting Dove, gives outlook speech in Spokane, Washington. A ton of speakers. So we have, including who spoke overnight, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 press releases or speakers in today's session. Let's switch gears now and look at the technical picture here. So yesterday, for those of you following along, looks like, okay, I didn't shift this. Okay. For those of you following along, the expectation yesterday based on the overnight session was to open a little bit out of range. It didn't. It opened in range right here. In range out of value. The expectation is for it to break the overnight high, rotate down to value high. And if it could not find buyers, so we expect some sort of a bounce and a try and attempt higher. And if it could not break the prior day's high, then it's likely to rotate down to the point of control. Expect it to chop around the point of control. If it cannot find buyers, if it makes an attempt and cannot find buyers, then it's likely to move down to the value low. So you can see here on the chart, the value area is always gray, this gray area right here, and the blue areas are out of value, and value represents 70%. 70% of the volume traded around the POC, the point of control, which is this pink line. Given that, as discussed yesterday, given that Tuesday was a balanced profile, we have a Gaussian or a normal distribution profile, just like we see in textbooks. So if you look up the word standard deviation on Wikipedia, you'll get a graph that looks a lot like this, and it splits the their distribution, of course, is perfect because it's textbook. It splits the value area, or what we consider the one standard deviation, or what's normal, to 34.1 34.1, and then it shows you the next sigma, which represents 95.45%, and then the next sigma after that, which represents 99.7%. That's 1, 2, 3 sigma, or standard deviations. In volume profiling, we're looking at the first standard deviation, and we consider that as what we call normal, or the majority of the population, right? The great a representative sample of the population. And when a profile is as balanced as this is, the value area becomes very important. So the value high and the value low, these are the limits of what the greater majority, or the first standard deviation participants, consider to be fair pricing on the day. And when we open above it, we come back to it. Generally, we see a reaction at the value high. We almost always see a reaction at the point of control. This is the most valuable price of the day, or the most traded price of the day. Remember, each one of these volume bars, these horizontal bars, represents how many contracts to the tick traded at each price in this commodity, which is the ES. And if we don't see the point of control as a price that was fair enough, and that's why we expect turbulence and chop around the point of control. If we don't see that as given current conditions, the current sentiment in the market by all the participants in it, if we don't see that as a fair price, then the market naturally moves to value low to test to see if now we find that to be a price that is a value. So what did we get? We got pretty much a picture perfect auction yesterday of value. If I was to write a textbook, this would be, and I was describing the auction process for an open in range out of value, this would definitely be in that book, because essentially what it did is it took out the overnight high, which was a weak high. If you recall, if you were here for that, we talked about the overnight high being very weak. It took out the overnight high. It tested higher. We did close the naked point of control that we've been carrying over since Fed Day, which was September 17th. And then we moved down into value high right here. Then we bounce to the prior day's high, which is this green line. This green line represents the prior day's high right here. Moves right back to it, misses it by a tick, right? Just perfect. Moves back down, a nice big rotation down, tests the prior value high test right here at 76.50, retests it. So you can see it's a perfect test to yesterday's high, break through, retest what was support is now resistance right there. Then it moves to the point of control. What does it do at the point of control? Lots of chop, lots of chop, lots of chop, lots of chop, which is what we expect, because this is the most accepted price of the day, the prior day, right? And then it drops, closes the gap, tests value low to the tick right there, and then rotates back to the point of control, attempts again, and then it basically trades a lot in the prior day's value. What does that tell us when we go back and trade a lot in the prior day's value? It tells us that the market sees that there's no change in what it considers to be the fair price, right? So overall, we spent the afternoon, the late morning, the afternoon, trading yesterday's value area, when finally it resolves itself to the upside, and then retests the prior day's value high. Again, here it is, the value high of the prior day. Retests it again right down here, and then it finishes on the high side. And it also moves the point of control from down here to there to there. And it ends up closing the day above the prior day's value. So let's look at it in the bigger picture here. It ends up closing the day above the prior day's value. It ends up moving the price action, gives us a price action higher high and higher low. It gives us a higher point of control. So the point of control moved up. Of course, the point of control moved up the day before as well, and it closes near highs. Now, the uh, the high on yesterday's trading of that new high at 91.25 was actually a pretty decent rejection of price. So you could see that it just, by the time we finished the day, this had a pretty good taper on it. It's not as pretty as the taper down here, but it's not a situation where the market had a point of control way up high and it had a very abrupt cutoff of volume. Therefore telling us that we're looking for highs overnight. We actually did not make highs overnight. We ended up rotating down to 71 and retesting this entire range overnight. So let's look at the overnight picture for a second as we put together the puzzle pieces for today's plan. And that's the whole point of these Trader Bites, is not to come in here and say, here's what I'm doing, just copy it. The point is for you to understand that it is the auction that drives the market, and understanding that auction is what is likely to give you a strong bias or strong hand when you put your trade on, which is when the moment of truth is for any trader. A lot of people can see how a system works. They believe the signal works. They have a confirmation bias, meaning they believe what they want to believe. And then they go to put on a trade. And then all of these questions come up about the basis of the trade and why did I put it on and why should it go? And oh my God, let me just close it for a small loss. The idea here is to always come with a strong bias idea and then let the market tell you what it wants to do. So Japan comes in right here and gives us some bad news, and then the market just drifts down overnight. And then the European session opens right at this bar here. This wow, that's awful. This bar here at 2 o'clock Central, and it's been pushing up all along. Overall, we have a very thin profile up top. We have a very concentrated distribution in the middle. The market does not show clear consensus on value overnight. This is a recipe for chop. The mid is up against the point of control for the session. The market's trading around the point of control. There's a wide value range. So overall, the overnight session is saying, the market doesn't really know what it really wants. The delta is lower and negative 12,000. The prices are lower than yesterday's close, so overnight inventory is short, is likely to be more short than long. So we do expect a small flutter on the open as the books even out. We have a small local double top here that is a threat to the shorts. And so I expect that the open today is likely to be fairly turbulent, fairly choppy, and so it's good to be patient today. Just if we end up opening here in the 1980 area, I expect it to just chop around, push through this 82.75. But overall, I expect the market to walk its way up to the point of control from yesterday. But I expect it to also be a pretty choppy day until the FOMC minutes this afternoon. That's my primary hypothesis for the day. Yesterday's hypothesis played to the T, to the levels. I want to also say and make clear that, again, my goal here is not to be right and then watch the market work the plan that I'm sharing with you and then gloat about it and reaffirm how right I am. The idea is that the baseline idea of what I'm doing here is basically to come in and say, I'm better off coming up with a plan that the market does not respect, doesn't even come close to what the market does. I'm better off doing that and observing how the market responds and adjusting than to do what most traders do, which is to come in and just fire from the hip and use intuition and trade from the gut and all that stuff, which has, in my opinion, has no long-term edge. There's just no edge to just coming in and seeing what the market does and then reacting to it consistently. You can definitely make money doing that. I think it's with experience you can probably pull something out of the market. But I would rather come in with a plan that is wrong every day, and I observe that it's wrong, than to not have a plan at all, and that's what the trader bite is. So if I expect chop this morning and I expect it to fail to the downside and push up towards the point of control, and it does not do that, that's okay. I'm okay with that. Remember, every time my primary hypo doesn't work, even though it looks like it's working and I might take a risk on it, when it doesn't work, it does result in a loss to me. But that loss also gives me a lot of information for what is working, who's in control, and what's happening, how good of a job the market is doing, and so on. And that information becomes very valuable, and I'm able to recoup the loss plus do something much more in line and in the zone than I did at the beginning. But days like today, I wait. I'm going to wait to see who the gorilla in the room is, and then fight from their side, trade from their side if possible. If I see that short-term traders are in control, then I'm going to look for moves that are extended, rotations that are extended, 5.5, 6.5 points in a direction, wait for it to pull back, either take the move with that impulsive move, or wait for the failure of the continuation move and go the other way, which is the most likely scenario when short-term traders are in control. How do we identify if short-term traders are in control, or if it's a trending type day that's brewing and so on? It's dictated by where we open, what type of an opening swing we have, and what we do with that opening swing. Once our initial orders come in, what does the market do? Does it drift away, or does it just keep trading through the open, back and forth, back and forth, back and forth, in a listless, kind of rudderless type of navigation through prices? And that's the whole plan here. So with yesterday having dipped into the prior 2 days range, there continues to be balance. So I'm extending this MC. So now we have an MC that goes out here, right? And so I'm encompassing these 3 days, and we could see that we have an HVN up top. We have a big area in the middle. But overall, this area is very, very much balanced. So again, we're looking at the point of control, 72.50, to act as a major magnet in the area. If I can draw an arrow, to act as a major magnet in the area. So any movement away is likely to bring itself back to 72.50. If we start to move away, push higher, and are unable to re-enter and continue higher, then I'm looking at the next area. Right now, we're trading anything higher than the 82 quarter. We're looking at the Fed day as a template, and I'm referring back to that day as the day that's driving things. Okay, so that's it today. I know I went long. I apologize. I just want to make sure you folks understand what I'm doing. If you do have questions or whatever, just go to the website. There's a blog, there's video archives, there's a glossary, a lot of stuff there. If you are still baffled by what's going on and can't understand it, just shoot me a message through the contact button on the website. Okay? Good luck today, and I'll catch you tomorrow. Stage 5 traders, we have our webinar at noon today and our pop quiz results. Take care.